Aloha, all my moneymakers out there. This is Indar Lang, and I'm your Hawaii money guy. And we have a great podcast today. We're going to talk about the market. Everyone talks about it. I hate talking about it, but let's talk about it. Let's talk about the ins and outs of the market and why you should not buy a house, or should you? So let's dive onto it and let's have some fun. Just before we get started, I'd love it if you guys could subscribe below, and that way we can reach more people and just help people make their money work for them in any different way we can. Thank you guys, and let's get started in today's content. So guys, let's clear the air about the market. We've been talking about it, you've heard about it. Every open house we have, every person's an expert on the market and the interest rates and what's going on. And I'll just share my 2 cents of it all. And really, when it comes down to it, for me, I'm an investor. I buy a deal, whatever the market is. I find a deal, and you should think the same way. I would think if you find a deal low enough, you should buy it. You shouldn't really care about what interest rates are. Because the coolest thing about real estate, interest rates, loans, you can refinance it later. 3 years from now, when the rates go back to hopefully 4%, 5%, whatever, you can refinance it then. You can go into a cheaper loan. So what you're seeing right now is, of course, the Fed chair, the federal chair, is trying to combat our inflation. So things have been driving up in price. All our gas, our cost of goods sold, all the things that we bring in, real estate. So inflation has been going up, and they're trying to combat to lower inflation by raising rates. And these rates now have been, the biggest effect really is in the real estate market. I think then the rates obviously are hurting the real estate market, or not, I don't know, to each his own if you're a buyer or seller, but it's really trying to drive the real estate market at least back down, or at least settle it out, as it's already been settled out as the time today. Today's November 23rd. So today, the market has been settled. The market has been obviously not raising, not going up anymore. But will it drop? I don't think we're going to see much of a drop. Maybe a slight dip, of course. But with these higher rates and so forth, people now are scared to buy a house. And the way you just got to think of it differently. If you think of it like everybody else, you are going to be like everybody else. So when our market was crazy high, cheap rates, 2-3%, people were buying houses 100,000 over asking at really high prices to get into a house, because they're cheap money. Interest rates are 2-3%. So people were paying. We sold houses 100, 200,000 over asking. We sold houses. I think we had 250 over asking. We did a house. And with that said, so now you're buying a house for a lot higher price point, of course. But now you're going to have a higher interest rate, but you're going to be able to get a house for a lot cheaper. You're able to put a lowball offer in, or you can put a asking offer. A year ago, 2 years ago, asking offers that was our lowest offer. We wouldn't even, that was like a joke. Asking, that was like, you wouldn't even consider asking. Now, back to a normal housing market, normally you should sell a house at asking price, or close to it. That's generally, to me, the level playing field when you sell a house at asking. That's kind of where you want to be selling a house. The reason you list at asking is because that's what the house is valued at to most people. But now with the higher interest rates, you're going to not be able to pay. I don't have any numbers here to show you, but a higher interest rate is going to bring down how much your monthly interest rate, your monthly payment. So maybe you're buying $1 million house and you're paying, I don't know, lack of better numbers, you're paying $3,000 a month. Now with the higher interest rates, that $1 million house you're going to be paying for $5,000 or $6,000 a month. So that's going to bring you down in the price points of what you can afford. So that higher interest rate is going to lower what you can buy. But that's not a bad thing, because you just buy, you're going to buy something at a better deal now. So you were buying something way at over market, way at a higher price, but now you're buying something at a better deal. So you're combating that by you're finding a better deal. In Hawaii, we appreciate in value very much so. So we have a 30% appreciation in Hawaii. So meaning our houses tend to go up higher than any other state, value in higher, faster and higher than any other state. So in doing that, say you buy a house, yes, you're buying it for a lesser value. You're not as buying a bigger house, maybe a little smaller house, but in 3 years, that house is going to appreciate, it's going to go up in value, and you can refinance. Then, you'll be able to take out maybe all your money that you had into this deal, if you bought it low enough. So think of that way. You bought a house, that it was maybe selling at $1 million, a year ago, but now you're buying that same house for $800,000 or $700,000 at a higher interest rate. So in 3 years, you may have that house be worth $1 million, and you'll be able to refinance at a lower rate and then take out all your money that you put into that house to buy the house, which is amazing to me, because then you can use that amount of money elsewhere to deploy and make more money and buy more rentals, buy more houses, investing the money, invest with us to make more money. So think of it that way, that this is honestly the best time to buy a house right now. There's not going to be no magic, time to where somebody says, "Oh, the best time to buy is now." The market is dropped or the market has crashed, and this is the best time to buy. There's no one going to ever tell you that. There's never going to be, if you ever hearing that, you're probably too late. The best time to buy is, if you're hearing that, you're probably too late. The best time to buy a house is always now. There's no right answer. If you're looking for a house, you need a house, obviously buy a house. Don't buy a house if not, and I'll buy them all. So you guys don't buy nothing, and I'll buy them all. That's the way I look at it. Less competition for me. And that's what we're actually seeing right now. We're putting a lot of offers in, a lot of low offers, and getting things accepted extremely low, because there may be no other offers out there, or the prices may be listed pretty high from the previous market, and now we can come in lower, or there's no one making offers. So combination of all of that kind of stuff, works out nicely. So buy now, refinance later, and doing so also, you don't have to get that higher interest rate. So here's some tricks to it all. Our interest rate's at 7% about right now. You can get a buy down. You can buy down your rate. You can have the seller, us, can credit you guys, and we can buy down your rates down to 5%, for 2 years. So you can do a buy down where you're paying 5% or even high 4% for 2 years. And then after that, you could refinance then. So you can do things like that. Or you can do the ARM loan. So an ARM loan is amortized. It's adjustable rate mortgage. So it's adjustable. So it means a 5-year ARM loan means in 5 years your loan will adjust in 5 years. So you can have a lower interest rate loan right now, and in 5 years it will adjust to whatever that is at now, or refinance then. So you can get a cheaper loan now with an ARM and refinance in 5 years or sooner. And again, it doesn't cost much to refinance, maybe a couple $1,000s or so, in the loan, and it's just taken out of the loan itself. It costs you, but it's just taken out of the loan. You don't have to pay any money out of pocket to refinance. So, maybe $2,000 to $5,000 it might cost you to refinance, $1,000 for some of the smaller stuff. So, it doesn't cost you much in the scheme of things to get back into a cheaper interest rate. So don't worry about, how to buy or when to buy. If you find a good deal, buy it. If not, I'll buy it. So don't hesitate. Just go for it. When you can do so much other creative stuff too with loans. So right now, sellers, may not be getting offers, so we are doing creative financing structures of deals where sellers are either financing parts of the deal, or they're giving us credits to help us buy down the rates, or we're taking over mortgages. So now is the best time to do creative financing structures of deals and to get offers out there in that way. There's so much different ways to buy houses. Of course, a DSCR loan is available where they don't care about your taxes and they don't care about all that other stuff. Good credit, that's about it. But you can get a DSCR loan where it's a loan based upon if the property works well as a rental. So you can get a rental type of loan, debt to service ratio, debt to service coverage ratio type of loan. And this will be a great way to get a loan if you have, maybe you're questioning some credits or just different scenarios to get a loan. So check out all the different avenues to get loans, and then understanding your credit and understanding you yourself to getting a loan. We can touch a little on that. I do things like I don't put my cars or any non-real estate assets in my name. So our cars, anything else is all in my wife's name. Generally, the loans are all under me when I buy real estate, so I don't want anything to hurt me under my name. So I move everything into my wife's name because she's not the one. She's not the one on the loan. She's not the one liable for our real estate loans. So I put most of all of our rentals and stuff under my name, and then that way I can qualify for more or bigger, or it just helps you and so forth. You can get Fannie and Freddie loans, and you can put that under your personal names. You can do a DSCR loans and put it in your company names. So different things you need to realize like that. Understanding interest rates and APR. So your interest rate and your APR, you really want to know your APR because your APR is actually what you're paying for a loan. Maybe you have a 7% interest rate, but your APR is like 10%, meaning that lender is probably charging you some points and interest, and you have a lot of other things wrapped in there. So you want to know that. You want to know your APR more so, because some lenders are going to charge points and so forth to do your loan. So you want to understand that. Which is, it could be a good thing or a bad thing depending on the lender that you're working with. In hard money world, we use lenders, of course, all the time, and we have to always pay points. It's part of the game in hard money. We have a hard money lending company, so please check that out. We have some great rates and great terms right now and really creative structures to do deals. So anyone looking for hard money, definitely check that out. But don't buy a house because I'm going to buy it. So interest rates may go up, may go down. What we really want to see is just a steady eddy. And what we just happened in the last 6 months is it's just such a dramatic rise that's why the public freaked out about it. That's why everyone freaked out about it, because it was such a dramatic jump. If it was gradual, everything's fine. And what happens now with lenders is they're still uncertain if the rates are going to go up, anymore. So they're not going to give you solid terms. I have a loan, but I actually don't have terms until we get towards the closing of the loan, and then they'll tell me exact terms. They can tell me a minimum, but they said it can go up. Because what lenders often do are selling off these loans, so they're not going to be stable in what rates they can provide you, and in doing so, it makes it hard to be a lender. It makes it a very kind of volatile market when the rates don't stabilize. And what we want to see is we just want a stable rate. We want to say, okay, 7%. We're going to stick at 7%. That's going to be our rate. People are going to accept that. People are going to be okay with that, and then go back to buying houses. Lenders are going to be, no, this is where we're going to be at. We can sell our loans, and we can, fluctuate, at that 7% margin. So what we want to see is just stability, and whatever rate we at, God forbid we make up to 10%, we want to see a stability of any of that. And again, people always are going to be buying houses. People are always going to be selling houses. So if you're trying to wait for a good deal, you probably don't get it. A good deal was 10 years ago. The second best good deal is now. And the third best deal is, you're too late. So buy a house if you find a deal. If you don't find a deal, then don't buy a house. If you need a house, buy a house. If you need a car, you buy a car. If you don't need a car, you don't buy a car. Same thing, and the same thing applies. If you need groceries to eat, you buy groceries. So you need a house to live in. You need a roof over your head. It's a lot better than paying somebody else's mortgage, of course. You're worried about interest rates again going up and paying more mortgages. The landlord is also getting interest rate and so forth. Our rents are raising, so we are also raising our rents. So you're going to be paying more in rents. You might as well pay more in your own mortgage. So, owning real estate, you always look smart in 30 years owning real estate. Best line ever. You can buy any property, and in 30 years, you'll just look smart. You'll look like, oh, you bought right, or you bought smart. And that's just what real estate does. It's just one of those assets that just stand the test of time. We have the stock market's down, I think, 50%, and, Bitcoin is crazy. What the hell is going on with that right now, of course. But real estate will just stand the test of time. So I'm buying now. I don't care about interest rates. I buy on a deal. So don't care about interest rates. If you like the house, buy a house. Just buy. If you like it, don't worry about rates. Rates you figure out later. I just want to take a quick second. And if you're enjoying our content, please subscribe below. I love it if you guys can leave us a review or a comment or let me know what you guys thought. I love honest feedback, and I love hearing what you guys think. So next segment, let's dive into our question of the week. I love talking about our question of the week. And shout out to all the questions and all the comments we get out there. And super excited to have those kind of questions. So the question is, when do you see the housing shortage ending? And this is from Keone. Will we ever see a housing shortage in Hawaii ending? And it's funny because before COVID, before the crazy market, Hawaii's always had a housing shortage. We have an influx of, we live on a small island, and there's only so many plots of land. There's only so much houses being built. We don't have too much huge developments like the mainland. The mainland have these huge, 1,000 house tract developments. We don't generally see too much development in that sense. And the housing shortage would offset supply and demand. So building more houses would offset that. And I don't see it ever ending. Hawaii, just people in general, I think across the U.S. now are the single family, they're moving into their own houses. Families are expanding, and children are buying their own houses. So the housing shortage is not something that's just going to ever end. I mean, we'll combat it and we'll try to catch up. Builders, once material prices obviously get cheaper, builders will start building more. I don't think ever it's going to end in Hawaii. Maybe in some other states, in the Midwest states, in some of those big land states, you'll see a difference in that scenarios. But in Hawaii, we have so much influx of 70% of our buyers are local people. Another 20%, of course, are mainland and overseas. We have a lot of overseas buyers. We have a lot of military buyers, and they're gonna keep on pumping money into our economy. Real estate generates a lot of money into our economy from all the construction and all the real estate buys and sells of agents, titles, Home Depot, everything involved in real estate. It's the number one producing money source in Hawaii is real estate. It's bigger than tourism. So it's not a bad thing, and it's great to have houses built for families. And we rehab houses, and we're bringing houses back for families to come in these neighborhoods that are being revitalized. In these crack houses or abandoned houses or these chronic houses we generally buy, that are they're really nicer for a neighborhood. So that's gonna obviously help a little bit of the housing shortages. but there won't be an end to it all. I don't think we'll see an end ever. Maybe a stability of it all, but yeah, we'll see. I'm not a futuristic predicting. I buy houses based upon today. I do everything based upon today. I don't really future. I'm not a crystal ball guy. Don't even like talking about the market stuff. I like to buy a deal on today because you can do whatever you want later. The deal highlight of the week, our Janesboro property. We're still looking for a few more investors. We're so close to funding the whole thing. We have a 12% interest for anyone out there who wants to join in, and quick turnaround. We got the appraisal back actually of it, and it evaluated at 8.2 million. Super excited. We're buying at 5.8 million. So 5.8 million. Once all our rents kick in, the thing's valued at 8.2 million. So all we have to do is refinance it out and take out our investors. And that's how we get all our money back out, is we refinance it out when rates and things change or not change. We just refinance it out anyway and take our money back out. So again, we're talking about rates earlier, and that's the best thing about real estate is you buy a good deal now, refinance later. You can use that money, even though it's going to cost us more money if the rates are higher, whatever. We can now use that money to go do more with real estate. So don't worry about interest rates. But that's what my thinking is, even with this Janesville property we're buying, is you're not on an interest rate trip. You're on a deal trip. You find a good deal, you can refinance it later. And that's what we're doing in Janesville. So we found a $5.8 million property worth 8.2, and we refinance it once all our rents kick in, and take our money out, all our investor money, and go do it again and do it again. And that's why we flip houses with high interest rates. You guys don't even know our interest rates we pay for flips. When I used to flip houses, and when I first started, we were paying 12% and like 2 points for money. I remember hearing 14% for money. So again, you're just buying a deal, factoring everything else in, and you're gonna either refinance or sell it for more. And refinancing is almost a form of selling to me, because you're just keeping it. So find a good deal. Don't worry about rates. Thank you guys so much for coming. Thank you guys. Like and subscribe. Indar Hawaii on all the social. Yeah, check it out. Message me, comments. And thank you guys. Aloha.